No, we're not live yet. We are live. We are back. Next big thing, HQ. This week's episode of This Week in Crowdfunding. And
What up, what up?
yeah, we're excited for this episode and some really good feedback on Twitter as to the stories we should talk about. So let's just hop right into it, right?
Yeah.
So, first story of the week was what we would like to call a win for the equity crowdfunding ecosystem. Now, not necessarily a not a Reg CF raise, but a Reg A raise, which is almost similar to Reg CF, but not the same thing. But I'm bearing the lead. reAlpha debuted on the NASDAQ. As me and Connor were talking about before it started, they raised their Reg A at $10 a share. They debuted on the NASDAQ through direct listing at $25 a share. So, Connor, maybe explain to everybody why this is so important.
So this is important because 2.5x. So it's a good win for all retail investors that invested in the Reg A. reAlpha as a company, what they do is they offer comprehensive proprietary tech solutions to short-term rentals and residential listings. So they're kind of not just attacking the Airbnb market, but it looks like they're also attacking the like beach house realty market, those kind of rental markets.
Short-term rental.
Yeah, and their strategy, it involves buying and developing technologies aimed to democratizing access to that asset class. So I'll be honest, I don't understand it fully, but it seems like they're using tech to really attack that market in order to help the owner of residential properties, or not residential properties, but the owner of rental properties make more money or figure out how to make more money. So that is exciting. Now, they raised a Reg A at $10 a share in 21 and in 23. And I did break down Reg A and Reg CF for everyone if you want me to go through that.
Just yeah, go after it.
So there's two types of Reg A plus. There's Reg A Tier 1, Reg A Tier 2. Reg A, I'll just go through Reg A Tier 1 first. It's up to $20 million. No restrictions for non-accredited investors. Financial statements are not required to be audited, and there's no ongoing reporting required. So to me, I see Tier 1. It seems a little risky just because there's no requirements for financial statements audited, and there's no ongoing reporting required. Now, for Reg A plus Tier 2, it's up to $75 million that they can raise, and this is what reAlpha raised. And non-accredited investors are restricted up to 10% of their total income or net worth, right? So there is a cap on how much you can invest. Financial statements must be independently audited according to the PCAOB or GAS standards. So for us accounting nerds, me and Brendan, we understand that. But that's a good thing. Yeah, and then required ongoing reporting, including annual, semi-annual, and current event reports. And then under Tier 2, businesses don't need to be registered, don't need to use a registered broker-dealer or funding portal. So under Tier 2, they can raise their own, just on their own website. There are some fees attached to it, obviously, like lawyer fees and stuff like that, structure it right. But to me, I see the requirements for Reg A plus Tier 2, and it seems like a pretty safe, they structured it in a way that really protects the investor, the retail investor that invests in the companies, because the company is going to be audited. The company is required to issue ongoing reports, both annually, semi-annually, and current events. So think about it like a 10K, 10Qs, stuff like that. And then I see it as non-accredited investors are restricted up to 10% total income. I think that might just be a way to, prevent non-accredited investors going all in and dumping absolutely everything into it.
Reg CF is that too, right? Non-accredited investors have a cap in Reg CF, from what I know.
Yes. So they have a cap. That cap is, I think, around 2K, if I'm not mistaken, every 12 months.
Not necessarily about your net worth. It's a number.
Yes. But with Reg CF, so Reg CF, it was capped at 1 million up until 21, and then they made it to 5 million. So, and the interesting thing with that is Reg CF was aimed more for helping startups and small businesses, where Reg A plus is aimed more for, I think, businesses, like bigger businesses, right? Businesses that are making more money that want to get funded. So that's a quick breakdown. I thought that was really interesting. And so also, all right, they direct listed on the NASDAQ, $25 per share. Big win for all retail investors that invested at $10 a share. That's 2.5, almost 3x their money, especially if they invested in the round this year, 3x their money in what, a handful of months?
Yeah, 8 months, 6 to 8 months or so. I mean, that's great. It's great return.
You can't do
this market.
Yeah, you can't do better than that. And I thought it was interesting when I was talking to Jeremy, and that interview will come out soon. He did, I believe it's a Reg A with Vocal, they're raising right now. And he was talking about how public companies might have their subsidiaries do kind of Reg A's or Reg CFs just to raise more money as another form of getting capital.
Mm-hmm.
I thought, that's interesting. We might see this trend more going forward, and that gives the retail investor more opportunities to invest in good companies.
Yeah, I think I look at it from I appreciate that breakdown, because even I sometimes struggle with the Reg A, Reg A plus, Reg CF. So it's good to kind of refresh even my mind on that. The way I look at it is kind of similar to somebody else we had on the podcast recently, whose episode's coming out on Monday, our friend Crowdscale. And
shout out Kevin.
Shout out Kevin. And, I look at it from the standpoint of, as a part of the crowdfunding ecosystem, as a crowdfunding investor myself, we need wins, right? We need wins. And while this isn't a Reg CF win, something Reg A is kind of a similar ecosystem, as I said. And having a win and having a company go public from this ecosystem is really important. And I think that it will, obviously great for the investors, great for the company, great that there's now a clear path to raising capital and then going public. But also for people that may want to enter the industry, there is more data and positive history around the industry, and that, like, all right, well, this actually could happen. Like, I could invest in this company at this round or at this valuation, and they could go public and it could go really well. So that kind of positive reinforcement for people, I think, is important. Now, I kind of wanted to transition into something we talked about before we pressed record or live, which was what happened to the investors, the Reg A plus investors, once they went public on the NASDAQ. So can you kind of detail that for the people out there?
Yeah, so they went public, and I saw a couple of, I guess, comments on the page saying that they couldn't sell their shares immediately, and that there was kind of a lock on, they had to wait 5 days to sell the shares. Mm-hmm. And I don't think this is uncommon. I know, whenever a stock kind of fluctuates really high, because I'm pretty sure the stock shot up immediately after it opened,
like 5,000%, which is
and then came down. But to me, that signals, well, someone's really messing with the market. Someone's trying to figure out how to skyrocket, get more people to buy into it, and then once more people buy into it, then they sell, and completely drop the price, because now the stock's at $19 a share. So that's exactly kind of what happened, and that makes sense why the market, the NASDAQ, would want to lock everyone's shares in for at least 5 days just to settle down the stock. So I understand that, but we were talking earlier, there's a couple articles we'll get into, but it's talking about the emergence of smart contracts and smart contracts entering the crowdfunding ecosystem in general, and how that's a really really good thing. And so I guess this transition is just smart contracts. What I see the utility behind a smart contract and what it will allow it is, if you invest in a company in the Reg A, Reg CF, you get a smart contract, and the smart contract says, okay, you can sell the moment it IPOs. For all those investors that weren't able to sell the moment reAlpha IPO'd, with a smart contract, it automatically just sells for them. So they don't have to worry about the process of not being able to sell, or the exchange not letting them sell. Smart contract will automatically let them, it's like a trigger, right? The IPO is the event, it triggers the sell immediately, and then they sell, they get their money out. So It provides liquidity. It provides also credibility and more structure too. And I
Transparency,
see
security.
transparency exactly. So
Yeah.
that's how I see it. Is that how you see it?
Yeah, I think I want to mention this one part first before I go into what I think. But basically, what we're talking about is that Columbia Stock Exchange is looking to integrate blockchain technology into their crowdfunding platform, A2 Senso. While that's on one side a huge win for crowdfunding business, small medium sized businesses as it relates to getting into crowdfunding, I agree with you. We've now talked about blockchain 3-4 weeks in a row between
Yeah.
Chain and last week's this week in crowdfunding. By now what we feel about the technology. Yes, it's great for security, it's great for transparency, decentralizing, and adding a layer of the words kind of escaping me, but it's adding a layer of trust to a system that can be manipulated almost,
Yes.
right? And um, while I don't necessarily know if it is a one size fits all solution for what happened with reAlpha, I do think implementing any sort of trust into a game like crowdfunding is an important thing to do,
Yes.
because I feel like that's like the number one barrier to entry to people, right? It's like,
Mhm.
you
Absolutely.
from like almost like first principles, like you are grown when you're growing up, you have been told to don't trust what you read on the internet, right? Like, do your due diligence. And I think that, like, in the back of people's mind when they see crowdfunding, sometimes that's the first thing they think. They're like, well, like, why do they want to give me to give them $5,000 or
Right.
$2,000? And it's a it's a shame that, but that's the way people are. That's just human behavior. And I think that any way in which equity crowdfunding can add a layer of trust and security and um, viability, I could come up with a million different words for it. But I think both of these stories show that if you get a win like reAlpha, there's obviously going to be some downsides and some you know uh, bumps in the road, but there are ways to improve it. And I think that implementing blockchain technology could be one of those ways to do it. And we've seen it a lot. Um, Now, Colombia, obviously, uh, I don't necessarily know much about their crowdfunding market, but the fact that they are looking to implement it, you always need first adopters and you always need people that are willing to take that chance. So I'm interested to see how it goes. Um, Maybe our friends over at DocuChain will be a part of it,
Yeah.
but
That'll be awesome.
that would be awesome. But I kind of look at all of these as, if I guess I'm tending to look at it from a macro crowdfunding perspective and saying, you know, while they may seem at a short term level like kind of disruptive and kind of like what the heck's going on, and like this isn't great and this isn't good and this is going to slow down this, or I think from a wider perspective, long term perspective, these types of technologies and these type of events are really important to keep the crowdfunding ecosystem moving forward.
Yeah, and I think that this week was a great week for small wins, right? And
Yes.
maybe you can classify the reAlpha IPO as like not a significantly large win, but a large win, right? Okay, so we have
Right.
that
Yeah.
large win, and then
It
we
depends
have
what way you look at it. It depends how you look
exactly.
at it.
It's a win regardless, right? We know
Right.
that, and at least from I think both of our perspectives, we see blockchain getting introduced into the crowdfunding platform is a win because that will increase credibility,
Hmm.
transparency, and trust. And so
Right.
this is a great week for crowdfunding as a whole because it's two wins. And Rome wasn't built in a day. Crowdfunding isn't going to become the next major market in a day. It's going to take little win
Right.
after little win after little win. They just have to add up, and slowly but surely, I mean, we're both seeing it, more and more
Yep.
traction in the industry. And, I think it's just momentum that just continues to need to build up for crowdfunding industry.
I encourage anybody out there watching to watch our upcoming interview with Kevin of Crowdscale, because he's been in the game not a little bit, but considerably longer than we have, and he really details well how crowdfunding kind of went from a smaller thing that maybe didn't have great investments to now it's really grown and there's great investments. And I think that from my perspective, the one thing that's really holding it back, one of the big things that's really holding it back is trust and security, and like someone literally sitting down, not only knowing what it is, but looking at it and saying, oh yeah, like this is legit. And that's obviously not like a one, there's no one fix to that. There's going to take multiple layers of security and public perception and things to happen. But these two stories, I think, are really important steps in that direction.
And I also want to touch on this. All right, first of all, Kevin's newsletter, CrowdScale 1 on X. Follow him, sign up to the newsletter. It's amazing. If you like startups, you'll love it. If you love crowdfunding, you'll love it. If you are just interested slightly, you'll love it. The detail's amazing. The value you get from reading it's amazing. But I want to go back to reAlpha. reAlpha raised a Reg A 21, right? So think about it. If you invested in 21, you had 2.5x exit. No other market is going to have that high of an exit. If you invested VC in 21, you're definitely losing a lot of money just because of the valuation bubble. If you invested in the stock market, I'm pretty sure it's probably even right now, maybe down even a little bit.
Yeah,
so
it depends. Right.
You think about that, right? That is massive. And that just clicked in my head how big that is. Okay.
I didn't even think about that. Yeah.
Right.
That's a really good point. Like,
right.
You can say, there's people out there that can say, oh, it's crowdfunding. Like, how are we supposed to know if it's a good company or not? But like, now look at it. Like, like this company was Reg A, right? Not Reg CF, but Reg A is kind of like Reg CF.
Right.
And you had that great return, which you can't get in this market these days. That's a really good point.
And you couldn't get it in 21. You couldn't pay someone to give you it in 21. So it's
we should put up the Instacart who invested in 21 and how they did. And I mean, obviously, right, those are like two very specific examples. And if you look at a whole portfolio of things, it might not make a huge difference. But I think that, again, like those small wins can have a huge difference moving forward.
Yes. And I think, too, another big win within that large win of the reAlpha IPO is how quickly the investors got the return.
Mm-hmm.
So I think part of the problem with crowdfunding is that you invest and you got to be an angel investor, which means you got to wait 10 years to get your return, see your return come to fruition. But with this, maybe this is a route that more companies are going to go, where they're getting bigger. They're not quite big enough to IPO, but they're almost there. They need a little extra cash, and maybe they want to raise a Reg A, raise a Reg CF to get extra cash, but to not go to maybe like an institutional investor, right? Or a VC, because the VC will be a little greedy, say, no, your valuation's this, I'm only going to give you this, and I want the best, what they call it, pref shares or something like that. So I'm getting a little out of my wheelhouse here, but I think we're going to start to see more companies understand the value and significance of raising and getting customers to become investors, because that means they're advocates. And we keep talking about this over and over. This is a common theme. The best customers are advocates. And if you can convert those customers into advocates by making them become investors, by raising around, not only do you get money, but you turn just a normal customer into the best type of customer. So it's a win-win for the company. So I have a feeling, within the next 3 years, we're going to start to see a lot more of this. And this is going to really help, because it's going to reduce the amount of time it takes for the retail investor to make their money or get a return. And that's what I see.
I agree with you. I think that's a really well-rounded perspective of I mean, I agree with what you said. I don't really need to add to that. I think you're right. I kind of want to give you your David Sachs red meat type Elon and Twitter and their valuation. I know you were really excited to talk about this, so I'll let you take the floor for this, and then I'll add once you're done.
Yeah. So I don't know if it was Monday, Sunday, scrolling on social media, see Morning Brew come out with the headline, oh, Twitter's now worth half as much as what Elon bought for. Then kept scrolling, oh, Wall Street Journal, oh, Twitter is now worth, or X is now worth half as much as Elon bought it for. Then I see Financial Times post a piece. Like, what the hell? And it's this constant theme that we keep talking about that the media wants to see Elon Musk lose. And it infuriates me so much because at the end of the day, and if you're listening to this, you support not only startups, but entrepreneurs and people that are innovators and trying to make a difference in the world. That's what we support. That's what we're advocates of. And seeing someone like Elon and everything he's trying to accomplish, from SpaceX to Tesla to Starlink to Neuralink, right? So he's trying to accomplish all, and then even X. Think about it. What he's trying to do with X is just make it a space where people can say what they want. Obviously, that's really tough because it's really tough trying to control freedom of speech and just making sure it's a net positive instead of a net negative. But he's trying to do that for society so that it's a net positive for society. And I think that is so important. And just seeing people talk about the valuation of the company that clearly he took private, and you can't judge what he's done with the company in over a year because it's going to be, you have to judge it from a 10-year timeline at least, right? But they're already going after him. They're targeting him. And it was like a hit piece that they all timed at the same time to release on the same day. And I'm like, what is going on? Can we please just stop and appreciate what he's doing? Appreciate the fact that he's still working 18 hours a day, 7 days a week. Even after he's accomplished this much, he's still working that hard just because he's that mission driven. And just take a step back and just appreciate it. And just, not many people are kind of that driven and want to change and make so many different things in that positive in society. So every time I see that, it's like, oh, why? Like, I liked Morning Brew before that happened. And then I saw that and I was like, oh, Morning Brew, you're just like the rest of them. So what do you think?
I have two things that come to my mind when I read it. Number one, how many companies acquired during that time period or raising capital during that time period would be valued at half of what they were valued at then? A few. Probably more than a few. I think a few is being incredibly generous. I don't know that for sure, obviously, but that's kind of where my mind goes from all the stuff I've heard from the rest of the private markets. Maybe, I don't know. That's kind of a weirder way to put it. Venture capital, my next kind of observation would be just from a practical use of the app, right? Like, I am a daily user of X, right? And I think it's sidebar. It's going to take a while for people to stop calling it Twitter, and they may never stop calling it Twitter, which is a move I didn't really understand why they wanted to change the name of it or why they went through with it. But as a user of the app, I think it's gotten better. Like, I've actually think the user interface, while it's like the same appearance, has gotten better. I actually think the timeline's better. I don't see anything wrong with it. I actually went on my first Twitter X space today. See, I did.
Really?
Right.
How was it?
It was good. Like, I actually, it was kind of like a live podcast. I mean, and I listen to podcasts, right? And I liked it. I went on JCal. He does this thing called what is it? Jet lag with Jason or something. Jet lag with JCal. It was actually pretty good. I actually enjoyed listening to it. But yeah, like I didn't even really understand spaces until today. I mean, obviously that was a feature back when it was Twitter, but like, I don't know. I don't think the app itself has really gone down at all. I think what they've done is actually pretty good. Like, they've kind of addressed the bot problem, I guess. I don't know. It's like the same funny people I usually follow are still there, right? Like, if something happens in the world, that's what I click first. So I guess when I think about it from like a behavior standpoint as an X user, I don't think anything's changed. So, I mean, obviously the underlying business is totally different is a totally separate discussion, pretty much, from the user experience. User experience, obviously, a part of that, but like, I mean, he'll probably never release the fundamentals of what X's business is like in the financial statements, but like, I can't see any reason why I would be upset with the product. Is kind of my point. It's like, yeah, everyone's like, they're valued at 19 instead of 44 or whatever. And it's like, Well, the only person that really hurts is
Elon.
Elon.
Yeah.
And obviously put in the comments if I'm like missing somebody, because like true, there could be second or third wave people that are affected by it, but like, why do I care if it goes down? Like, obviously, I mean, it's newsworthy because it's a bad investment by return metrics, but like, he was never doing it for the money. So like,
Yeah. And so was every investment in early 22 or late
right.
21, right? Compared to now, like we just talked
Oh
about
my god,
the
yeah.
valuations.
Instacart is the best. We keep talking about Instacart. It's just such a very potent example because they went public. But like, there's other examples out there. I don't know. I don't. I'm not. I'm an Elon fan. I mean, I have his book right here, but um, I don't know. I think that if I'm really just going to be honest, take everything financial aside and dollar sign wise and commas and zeros, I think the app is the same, if not better, right? I don't think it is any worse. So I don't think it's really worth it for people to comment and be like, oh, look at this. What a terrible job he's done. Because there's people out there that have said that. And it's like, all right, like, that's fine. But I actually think what he's done with X is a net positive with what he's changed and the new features. And I don't know. It's kind of a delicate situation. Everybody has an opinion, right? I mean, what can I say? I mean, I'm willing to listen to anybody that has a contrary opinion about it, but that's just.
Hey, there's two universal laws. You want to hear what they are?
Let's go.
Don't bet against Jordan. Don't bet against Elon.
And don't give the ball to Brady with 2 minutes left.
But I will say,
that would want me to say
that. I will say, I think X in 10 years from now will be the number one social media platform. I think he's going to connect it to Neuralink, so there's going to be some sort of feature where it's going to be connected to Neuralink, and it's going to be connected to Tesla, and it's going to be connected to Starlink, right? The satellite.
Yeah, the Wi-Fi.
Starlink.
Yeah. Mm-hmm.
So I think they're all going to be connected. I think X is going to be everything from Twitter to entertainment to like watching videos, watching TV shows to payment. Like he said, he wants to make it a payment. So I think it's going to become the number one app 10 years from now.
We post our full episodes on X now, and like they do pretty good. Like, I'm not gonna lie, and because there's just so many eyeballs on X.
Mm-hmm.
So I mean, I can't deny anything you're saying. It's totally possible, like totally possible. So yeah, I think, does that do it for this week in crowdfunding?
I think that does. As always, thank you everyone for watching, supporting us. We appreciate y'all. Let us know who you want us to talk about, what founders you want us to interview. If you're looking at making any investments and you want us to interview a founder before you make the investment, reach out to us. We'll get that interview done.
Mm-hmm.
We'll talk to them. I think it always, at least from my perspective, Brendan, I'm sure you agree, but you can say otherwise. I think it always helps seeing an interview of a founder before you invest. Would you agree with that?
100%. Yeah. Knowing who they are and just what they're all about. I kind of wanted to say before we sign off, the guests that we have been interviewing recently and the interviews that we're going to release coming up have been just some of the best, greatest interviews we've had. Some of the nicest people. We're very grateful that they took the time to talk to us, and I hope you all enjoy the upcoming interviews. They are really good. So, interview coming out on Monday.
Kevin.
Yeah, with Kevin of CrowdScale. And then we'll be back with This Week in Crowdfunding around this time next week.
Yep. Let us know if you want us to talk about anything for This Week in Crowdfunding. Brendan and I always like giving our 2 cents for whatever topics there are.
So yeah, just shoot an article our way, shoot a headline our way, and we'll put it in the docket. So with that being said, we will see you next time on Next Big Thing HQ and This Week in Crowdfunding. Thank you.